Difference between payday and personal loans in the UK. Definition of personal and payday loans. Most people feel that payday loans and personal loans are one and the same thing. But this is not true at all. They may seem similar, but they have many big differences which set the two options at opposite poles. One should consider the credit and the amount one needs to borrow to know what one qualifies for before one applies for it. Personal and payday loans are both useful when one requires an extra boost in finances, but this is the only similarity between them. The factors that vary are the term, cost, and the amount, among other different finances. Differentiating factors. The loan amount also differs when it comes to a comparison between the two. Most banks in the UK do not lend less than £1,000 for a 12-month period in case of personal loans. And when it comes to cost comparison, personal ones are considerably cheaper with a maximum APR of 29.9%. But one needs to have good and excellent credit. Payday loans can be usually more expensive, but it does not require any strict credit requirement. When it comes to loan term, personal loans offer around 5 years maximum as a loan tenure. Payday have a shorter term of around 2 to maybe 4 weeks that can go up to 12 months. But when it comes to eligibility, personal loans which are offered by credit unions and banks have very strict criteria for eligibility. They generally require borrowers to have a good credit along with a fairly strong financial background. Payday loans seem much more flexible in comparison, as lenders only require the borrowers have a proper and regular source of income for qualifying. Personal loan lenders are online lenders, banks, peer-to-peer lenders, and credit unions, whereas payday loans are offered by those lenders who specialize in check cashing services and short-term lending. Payday or short-term loans. Payday loans, auto title loans, and installment loans have high fees and rates, which could trap a person in a debt cycle. The person could be forced to take a second or even third loan just because they couldn't pay the first one in the stipulated time limit. Alternatives to short-term loans like local resources such as local charities, government agencies, and non-profits offer relatively free services for financial needs and also help with rent, food, and utilities for those people who are in dire need of it. One could also get payment extensions by talking with the concerned bill providers regarding an extension or a longer time frame or payment plan if one is behind on his or her payments. One can also take side jobs to catch up on the payment. Cost for each option. The payment cost varies when it comes to payday loans versus personal loans. The interest rate that you will receive, along with the terms, is based on the individual's credit history, and if one has collateral or not, along with the amount you borrow and the stipulated loan term. Payday loans, on the other hand, have APRs of 3 or 4 digits, from 100% to 1,000%. The actual total cost depends on the state of living of the borrower. APR represents the yearly cost, which is important to note. Deciding whether to opt for a payday loan or a personal loan depends on the amount of money that the individual intends to borrow, and it also depends on the person's credit. If one needs to borrow around £50 to £1,000, he or she can opt for a short-term loan, as personal loans require the person to borrow a minimum of £1,000 to around £2,000. One must also consider the time factor. Short-term loans offer faster times for the turnaround when compared to personal loans, as it involves less approval process. Nowadays, more and more personal loan providers are shifting online. Hence, they have almost the same processing speeds, similar to short-term loans like payday loans. Credit history is also an important factor. If the borrower has excellent credit scores, they're more likely to save money by obtaining a personal loan at lower interest when compared to a payday loan which will be available at higher cost. The total cost of the loan depends on the borrower's monthly payments and also depends on the total amount to be repaid, which depends mostly on the interest rate. One should always compare and consider various different options and check on online calculators offered by the lender to see which mode of loan is best suitable for your needs and how much one will need to repay. Alternatives available. There are many alternative options available to personal loans and payday loans, which can be beneficial to the borrower. One can borrow a small sum or amount of money without the need for the borrower taking on a payday loan. Another short-term loan is an installment loan, in which the borrower repays the amount in a single lump sum. Thus, personal loans and payday loans for bad credit can be beneficial only when one carefully examines which loan type is best suited for his or her needs. And if you like this video, you can always subscribe to the channel for more like this.